All right, boom. What's going on, everybody? It's your boy, Cody Sperber, the Clever Investor here, streaming live. If you're watching this live, I guess if you're watching this as a replay, I was streaming live, and I'm here to talk to you guys today about I'm going to answer one of the most common questions I get through my direct messages or through my email is, can you invest in real estate with no money? All right, super fair question. All right, who wouldn't want to invest in real estate with no money? I'm actually going to show you 4 powerful ways to invest in real estate with, almost no money. The answer to that question is you can almost do it, right? I'm going to show you 4 powerful ways to almost invest in real estate with no money. I mean, you're going to invest in real estate, but you're almost going to do it with no money. I think that makes sense. Anyway, so if you're coming in right now and you're watching this live, please play full out. First off, shout out where you're from over in the comment section so I can see where everybody is streaming live from. I'm doing this for you guys, right? I'm here to serve you guys and teach you creative real estate concepts that you probably would never have heard of otherwise. They don't teach this stuff in schools. And I know for me, when I first started in this business, I only thought about real estate the traditional way, right? You go to a bank, you get a loan, you have to qualify for that loan. That means you need good credit. You need a job with 2 years of job history. You need to provide 5 million different documents to the bank in order to prove, you can pay for the loan. What else? You got to put money down. I mean, there's a very traditional way of buying real estate. You go through a real estate agent, they find deals for you. All the traditional stuff. And in the beginning, I thought that was real estate. And I thought you had to have a bunch of money in order to ever invest in real estate. And so I didn't even think that I could build a career as a creative real estate investor. And I got really lucky. Most of you guys know my story. I got really lucky. I had a friend named Jeremy take me to lunch. And while we were there, he pulled up in a brand new Mercedes. I was blown away. I was like, dude, how did you get the car? And he was like, man, I flipped a house. I used none of my own money, none of my own credit. It's this process called wholesaling. And he literally penciled it out on a napkin. And that chance encounter, that lunch changed my life. All right. And so I hope that if you're following this page called Real Estate Investing, or if you're following me on YouTube, chances are you probably already are thinking about real estate either as an investment vehicle to build wealth, or you want to become an active real estate investor and actually make millions and millions of dollars investing in real estate as an active investor. So you're probably a little further along than me at that chance encounter, never ever hearing about creative real estate investing before, but I'm pretty sure that some of these 4 methods are going to be brand new to you, and I hope it inspires you to get out there, learn more, and go and try some of these things. All right, so first off, let's see. What's up, Roberto? Glad you're here. Miami, Florida in the house. Hola from Los Angeles. What's up, baby? We got Wyoming in the house. Fresno, California. Denver, Colorado. Mississippi. Man, you guys are coming in from all over the place. What's going on? All right, so check this out. Let's go over the 4 ways to invest in real estate with little to no money. And the reason I say little to no money is because some of these strategies will require you to put some money down. I've done some of these strategies with as little as $100, right? And so it doesn't require a lot of money. You can get in and out of some of these strategies for extremely little money out of pocket. To say no money out of pocket would be a little aggressive. Some of these strategies, you do get all your money back at some point. So even though you have to outlay it at one point in the process, you do get it back. So I guess that would be kind of considered no money. But I want to at least pre-frame it by saying it's not no money down real estate. It's little to no money down real estate. And sometimes you can get your money even back. All right. So that's the pre-frame. With that said, 4 ways to buy real estate with no money. All right. Way number 1 And most of you guys probably already, when you think of creative no money down real estate, you probably think of wholesaling. All right, we'll talk about what is wholesaling real fast. Most of you guys already know what it is, so I'll clear through that pretty quickly. The next way is seller financing. I'm going to explain how that works and how you can get started with seller financing. The next way is partnering. All right, I've done a lot of deals where a partner's brought the money, and I'm going to talk about using OPM or other people's money. And the last way is called a subject to transaction, all right, which is a creative real estate investing tool. All right, so wholesaling, seller financing, partnering, and subject to. Now, think about this, all right? Nick says, I love using private money for my flips, working with a couple 100,000 now. $1 million would be nice. Yeah, I agree with you, Nick. Using OPM is super cool, especially if you structure the deals correctly. So let's talk about what Nick's doing. Let's just talk about this whole concept. So first off, you guys know my story. I was a bookkeeper. I was barely making ends meet. I do this chance lunch encounter with my friend Jeremy. I'm holding this napkin. He penciled out wholesaling on the napkin. I'm staring at it. I'm like, this has to be a scam. Like, this can't be real. This doesn't even make sense. Like, I was so skeptical that I couldn't even get myself to open up the first day or two that this could even really happen. I only thought about real estate in the traditional box. And so for me, I took that napkin home and I remember staring at it going, this can't be, this doesn't make sense. How does this work? Wholesaling? No money down real estate investing? Use other people's money to buy real estate? Like, how is this possible? And for those of you, just to catch everybody up to speed on this, wholesaling is one of the oldest forms of no money down real estate. And it's really not even investing. If you ask me, wholesaling is more like having a kick-ass high-paying job, right? It's kind of like maybe selling cars or something like that. We're not actually buying the real estate, taking ownership of the real estate. We're not actually paying for the real estate in our own name. We're really flipping contracts, right? Now, there are wholesale closing techniques where for a very brief period of time, you take ownership, right? Using the double close method. But even then, I wouldn't really consider that investing. You're really property matchmaking. And let me explain what that means just to catch everybody up. But essentially, wholesaling looks like this, just real fast. Here's you, you're the wholesaler, and you have dreams of making big money, right? But you don't have a lot of money. You have a lot of time, but not a lot of money. And so you're sitting there thinking, okay, Cody, I see you on YouTube and on Facebook talking about making money in real estate as a wholesaler. How does it work? Well, it works like this. You want to make money and you take classes, you gain specialized knowledge, right? You understand how all the steps in the process and how the process works. And essentially what you do is you market your business, right? You're trying to generate leads and you're trying to find leads or generate leads of homeowners who are motivated to sell quickly, right? Why would somebody want to sell fast? Why would somebody not want to take the time and go to a real estate agent and list their house for sale and get as much money for the house they possibly can? Normally, it's because life has happened to them. One of two things has happened. They are either in financial distress for whatever reason. They lost their job. They went through a divorce. They have medical issues, legal troubles, some major financial challenge. They're behind on their mortgage payments. They're going to lose their home to foreclosure. They inherited an unwanted property. Something financially is causing them pain, or the house itself is causing them pain. It's old, it's outdated, it has water damage, fire damage, it's foundational issues, right? And so anytime somebody makes a decision to not sell the traditional route, maybe they had bad past experiences with real estate agents, or they just don't want to pay commissions, and they think for sale by owner is a better strategy. Whatever is causing them to become motivated, that's You have to realize 95% of the world, they're not motivated. They're never going to sell your house at a discount. They'll go through a real estate agent. But the 5%, if you know how to market to them, they will raise their hand, and life is happening to good people all the time. They will raise their hand and say, I want an offer. I need to sell quickly. I need to get cash by Friday. And so these people, you market your business to find motivated sellers, the 5%ers that have to sell quickly. They raise their hand. You negotiate with them. You put their house under contract using negotiation techniques. You put their house under contract. And let's say in this scenario, the house is worth $140K. You put it under contract for $90K. Needs some work. Then what you do, after you put their house under contract, and when you put a house under contract, you gain what's called equitable rights into the property. Up to this point, you haven't purchased it yet. You just filled out some paperwork. But when you filled out that paperwork, you now gained control over this piece of real estate. This is the way our U.S. contract laws are. This is what gives you the ability to control the real estate and eventually flip the paperwork and get paid without having a real estate license. Because you're a principal in the transaction, you have the right to be able to do this. So anyway, you market, you find sellers that need to sell quickly for cash, you put their house under contract at a discount from retail, because one, cash is king, money talks, and you could pay less if you're paying cash. And number two, the house needs work for some reason. And so by the time they would have sold for the 140, but you back out closing costs and real estate commissions and make repairs and wait 3 to 5 months, holding costs and all that stuff, they're not going to net much more than this number anyway. They might get 105 or something like that, or 110. But with you, they can get 90 and they can get it quickly. So once you get control of the real estate, you then market again. You use your marketing capabilities to find people with a smile attached to their eyeball. All right, that didn't work. No, let's try that again. You market to find cash buyers. Cash buyers. Who are cash buyers? They are landlords and rehabbers that have more money than time. They are out looking for good deals. They're talking to real estate agents. They're talking to wholesalers. They're trying to find their own deals, but they have more money than time. And that's where you come in. You serve up good deals that are off market that nobody else knows about. You put in all the work to put this deal together. You serve it up to them on a silver platter and they go, thank you. Thank you for bringing me a good deal. I'll tell you what, I'll buy this deal for $100K off of you. How's that? And you go, cool, let's do that. And what you just did, you assign your rights into this contract, okay, over to them using a one-page assignment form, okay? You step out of the transaction, they step into your shoes, and when the deal closes, use their money to pay this person. That was the worst arrow on the history of arrows ever. You use their money to pay off this person. That leaves $10K left over for you, which goes into your pocket. And you now officially did a wholesale deal. Now, in order to do this whole thing, when you put a house under contract, you normally have to put down what's called an earnest deposit. Right? I've seen it as low as $10, and my typical earnest deposit is $1,000. Try that again. $1,000. An earnest deposit is called consideration. All right, and it's what makes the contract valid and legal. In the U.S., in order to have a valid real estate contract, it needs to be in writing. Everybody needs to be of sound mind, meaning you can't get somebody liquored up and convince them to sign a contract with you. They have to be of legal age, and there has to be consideration. So it can be $10, it can be $100, it can be $500, it can be $1,000, it can be $10,000. It's up to you how much you both parties agree to what the consideration needs to be. So when I say it's little to no money, this is what I'm talking about here. This is the only cash outlay. Obviously, if you have marketing expenses, that's a cash outlay. If you have to have a phone or a computer or a car, right, or you take classes or, get specialized knowledge, that's a cash investment into your business. But when we're talking about the actual real estate deal, when it comes to wholesaling, this is the only cash out of your pocket, and you get it back when the deal closes. So if I put up $1,000 in this scenario, I would actually get $11,000 back. My $1,000 earnest deposit would come back to me, and my $10,000 profit. All right? So that is wholesaling. Number 2 was seller financing. Before I get into seller financing, what do you guys think about wholesaling? Can you start to see how you can go out there and create an extra $5,000, $10,000, $15,000 per month just doing one single wholesale deal? If I taught you how to generate the leads, if I showed you how to fill out the paperwork so you can control the real estate and not get into any legal trouble, if I showed you how to put the business together so you can find the cash buyers, play matchmaker, and put these deals together, could you go out and, using my strategies, find one deal per month to wholesale? Absolutely you could, without a shadow of a doubt. And this is exactly how I got started. I went from staring at that napkin going, this is a scam. This can't be. How many people would actually ever sell at a discount? Why would anybody do that? You have to have a real estate license. This doesn't make any sense. 2, this might work. I better look at this further. I better not be so rigid and be such a rule follower and think that there's only one way to do real estate. I better get smart. I better look into this further. And when I started doing my research, I started realizing there's this whole world of creative real estate. There's the traditional way, and that's made a lot of millionaires, but there's a lot of actual creative real estate investors that are making millions, if not tens of millions of dollars. So if I showed you how to do that, could you do one single wholesale deal? Absolutely you could. All right? So that's wholesaling. And by the way, my team is on here right now answering some of our comments and that kind of stuff. So guys, if you could post a link to my No Money Down Flip Houses book for me, that would be awesome. Let's give them a free resource so that way they can learn more about wholesaling in detail. And that free book, it's a Amazon bestseller. You can literally, it models out the entire wholesaling process. So check that out. Look at the links down below. Seller financing. So think about this. You can, if you want to buy a piece of real estate, you can go to a bank. They'll run your credit. They'll ask you for a down payment. They normally want 20% down, something like that. You put down your down payment. They pre-qualify you or qualify you for a loan. They lend you money. What if you didn't have to go to a bank and you can convince a seller that owns a piece of real estate, and this strategy works when they own it free and clear. That means they own the real estate outright. What if you knew how to position and approach the seller to get them to be the bank, them to carry back the mortgage? I've done this many, many times, and I built a really great rental portfolio by getting the seller to finance me. This is called a seller carryback or seller financing. And essentially what you do, if the homeowner owns the house free and clear, when I approach them, I make them 2 offers, right? One is all cash as is, at which point I want to buy it at a discount. Or I do terms, at which point I'll buy it as is, but I'll pay closer to retail. Right? And I'll say, listen, I'm you know, if you'd like to do a deal with me, there's two different ways we can approach this to create a win-win scenario for both of us. Now, I know that you own the house outright. I know that, you know, you're not looking for somebody to come and try and steal the house from you or, you know, buy it at too much of a discount. But I got to be honest with you, if I'm going to depart with the cash that's in my pocket or in my partner's pocket or in some pocket, right? If I'm going to give cash to you, we're going to need to buy it at a right price. So here's my offer, all cash. And I know it's, you know, like, let's say they wanted 100K and I offer 70K. Okay. All cash. You know, I know it's not exactly what you wanted, but, you know, if I'm going to pay you cash, I'll do it for 70K, or I'll pay 95K if you'd be willing to carry the note. And the way we'll structure it is I will make payments until paid. And what we'll do is we'll amortize it over 30 years, but we'll balloon in 10. Think about what I just offered them right there. Think about what I just offered them right now, or right there. 70K all cash, or I'll pay closer to what you're asking for. Maybe I'll even pay 100K. Maybe I'll even pay 105K. But what I'm going to do is I'm going to have them carry this note. We're going to stretch it out over 30 years. But I'm going to balloon it in 10. So I'm going to stretch the payments out over a long period of time. I'm offering to put no money down. I want you just to carry the whole amount. We're going to stretch it out over 30 years, but I'm going to balloon it in 10 or balloon it in 7 or balloon it in 5, which then creates a sunset. That way they're not all stressed out like they're going to be in this deal with me forever. But it creates a sunset within our relationship, but it stretches the payments over a long period of time. So that way my PITI gets lower. And the words until paid equal 0% interest payments. That means principal only. They might come back and say, no, Cody, I'm not going to carry the note and take 0% interest. That doesn't make any damn sense to me. You got to pay me something. Like if you went to a bank, what would you do? And okay, well, why don't we give you 4% interest? So you go back to your mortgage calculator, you put in $105,000 as the loan amount, 4% interest is the interest amount, 30 years as the length of the loan, and you see what the PITI is. Right? What is that? And what happens is whenever we're doing, here's what's so cool about seller financing. There's an unlimited amount of combinations that you can creatively come up with to get them to do the deal with you. They might come back and say, no, I need 5K down. Okay, I want 5K down. And you might say, oh man, Bob, I'd love to put $5,000 down, but honest, this is just starting to become a little tough for me. I would much rather just pay $70,000 and call it a day. I know that's not exactly what you want, but what if instead of paying $105 for the property, what if I pay you $110? So we build my 5K down and I just increase the sales price, but I still come out of pocket zero. I'll take over the property. I'll take over fixing it up. I'll take over managing it. I'll take over dealing with the tenants. You take zero down, but I increase the purchase price by 5K. Would that work for you? And you just keep going back and forth and you just keep manipulating all the different terms of the deal, the down payment, the interest rate, the length of the loan, the balloon period, until you come up with an arrangement that makes sense to both of you. What do you think? Seller financing, cool or what? Can you start to see how you can get into real estate with very little money out of your pocket if you get good at positioning the offer like this. This is why I'm so passionate about real estate, because it gets me so excited, because there's so many different ways to construct a deal. It's not one size fits all. It's the person with the specialized knowledge, the person that understands how to create a relationship with somebody and pull out the information that they need. If I know what the seller's biggest hopes and dreams and fears are, I can then start building an offer that is irresistible for them. Does that make sense? Thank you, guys. Julia says, I just joined. This is a great topic. Catch everybody up that's just popping on. The question of the day is, can you invest in real estate with no money? The answer is almost. And I'm showing you 4 great ways to invest in real estate with little to no money out of your pocket. Robert's like, I'm driving. I'm gonna crash if you make me participate. Don't crash. All right. What if they decide to say cash only? That's a great question. Then you say yes, cash only. You write an offer for $70,000. You put the house under contract, and you go back. How do I get back to that other thing? Do you know how?
Yeah, go back to what you were at. Then you click the arrow next to the one that you want at the top of it, or at the.
How did we do that? Show?
Show.
I just did that. Oh, maybe, was this it? Yeah, yeah, that's it. High five. Rock on. All right, so that was the awkwardest. It's just like a. All right. So then you go back to here. So after they say yes, you just come over here, you put their house under contract, you ramp back up your marketing. You find some cash buyers, you use their money to fund the deal, you assign your rights into the contract back over to them. You see what I'm saying right there? All right. I'm starting to get this. So that's seller financing. That's way number 2. Way number 3 is partnering. So for those of you just joining, we went over wholesaling, which is way number 1. We went over seller financing or seller carrybacks as way number 2. Now we're going into way number 3, which is partnering. Now, here's my disclosure on partnering. People will give you money to invest in real estate if they believe a couple things. 1, that you are an expert at what you do. You have specialized knowledge. You know how to source the deals at massive discounts that nobody else knows about. You know how to get those deals under control. You have the crews, you have the team, you have all the moving pieces to monetize and make money from those deals. That's the second piece. If you don't have the specialized knowledge and the relationships and resources, why would anybody give you money to invest in real estate and partner with you? They wouldn't and they shouldn't, right? So this, my disclosure on this is really only for people who are a little bit more experienced, because you want to treat their money like your money. But here's the golden rule in real estate. Leverage with a abnormally weird L is power. I should have just kept this going. Leverage. Leverage is power. You want to become a master at leveraging other people's time, their skills, their connections, their resources, and their money. I've bought hundreds of houses. I've ran hundreds of rehabs using OPM, right? People go, but Cody, you're supposed to be rich. Why would you need other people's money? Because, you ding-a-ling, OPM is the golden rule in real estate. If you want to scale your business, if you want to increase your returns, your cash-on-cash returns, and minimize your risk, become a master at using OPM. All right? But with the understanding that you need to treat their money like it's your money, and you want to have specialized knowledge and have a real strong game plan of how you're going to make both you guys lots of money. So what are some different ways? Oops. All right. So what are some different ways to partner with people? In the beginning, I learned how to spell. In the beginning, it might be something like this. A 30-70 split. This is the money partner. They get the majority of the profits. This is you. And this is while you're trying to get credibility. Maybe your first couple times raising private money using OPM, you give the money partner the majority of the profits. And you do this for, say, 5 flips. And you build a credibility book. Okay, you build a credibility book, because once you have credibility and you have authority and you have specialized knowledge, then what you can do is you can flip the script. And then now you get 70% and they get 30%. Now this is you. Now you're taking the majority of the profits and your money partner is getting 30. This is how I do partnerships now. Now I'm like, look, you're lucky to do deals with me. I have more money partners than I do deals to be able to do. And if you want an investment secured by real estate, if you want to earn phenomenal returns on your investments, and you know Cody Sperber only does the best of the best. I only hit home runs at this point, right? I'm not gambling. I don't have time to gamble, nor do I care about, I don't need the money that bad. So I only go after my home runs, right? So if I'm going to take a deal down, it's going to be a home run. Everything else gets wholesaled. And so now, after my 5 flips, I built a credibility book, and I would sit down with potential private money lenders, and I'd say, here's the deals that I'm doing. Look at this one. I bought this. It looked like this. I sold it. It looked like this. It took this many months. I have every step, every resource, every connection, everything needed to turn this amount of money into this amount of money. Now look at this next one. And I would flip through the pages of my credibility book, and by the time I was done, the private money lender was like, damn, how do I get involved? Great question. Listen, I don't have any opportunities for you right now, but when I come across good deals and I call you, now that I know that you're a willing partner, what's going to happen is I'm going to go source 2 or 3 potential deals for us. I'm going to call you. You're going to have your money sitting there ready and waiting to go. Speed is very important. That's how I'm able to buy these houses at massive discounts. So I'm going to call you. I'm going to tell you which ones that I want to go after. You're going to approve it within a few minutes. You're going to send over the money to title. I'm never going to touch your money, and we're going to be off to the races, and we'll be partners in the deal. They lend 100% of the acquisition and 100% of the rehab. Let's think about this. If they're lending 100% of the acquisition price and 100% of the rehab and all the closing costs, how much money do I have in the deal? A big fat zero. It's my knowledge, my skills, my connections, my resources, and my time, right? And remember, this is me. So it's pretty awesome when you have $0 into the deal and you get 70% of the profits. What's that cash on cash return? Infinite. That's an infinite return. That's a beautiful thing. And I tell people about this and they're just like, what? And it's like, yeah, this is how I built my real estate empire, right? But you have to have the specialized knowledge. You need to know and be able to create the authority in the space, right? All right. What do you guys think? What do you think of that one? You like seller financing? You like partnering? You like wholesaling? Ola says, do I pay tax after making my profit? Yes. And it's short-term capital gains. So you have a partner. You have a third partner in the deal, right? It's you plus money plus Uncle Sam. That's your business, right? So if you're making big fat chunks of money in a very short amount of time because you're rehabbing houses, you better pay your taxes. Ask me how I know that. My first year that I looked at my tax returns, and I remember this vividly because I was so proud of myself. I looked at my tax returns and it said $1.3 million. And I was like, holy shit. Sperber, you're a million. Like you're officially like a millionaire. You made over $1 million in 1 year. Like this is it. I made it. And then the horror washed over me as I realized I didn't even realize I made that much money that year. And as I bought new pickup trucks and went on awesome vacations and bought a house and bought clothes and paid for all my friends and took care of family and did everything that I was doing, guess what I didn't do? I didn't pay taxes. If you make 1.3 million, how much do you think you owe Uncle Sam? It's more than 500,000. Talk about being in the most panicky place you can ever go financially, because it's not like you can just not pay your taxes, right? That's the problem. So pay your taxes. Structure with the end in mind. If you're going to be wholesaling and quick flipping and rehabbing, then you better pay your taxes in real time and have the financial ability to control yourself. Because I didn't. And it took me about 3 years to unwind that shit show. So just a little me spitting game to you. Cody Sperber trying to help you out. Ola, pay your taxes. All right, great question. Julia's like, you didn't pay taxes. Good job. You know the worst part about not paying taxes? Besides the fact that you have to pay your taxes? You want to know it? It's the fees that they nail on that make it almost impossible to ever pay your taxes. I'm talking about $5,000 a month fees. So every month you don't pay, it's like $5,000 more. Next month, 10 grand more. Next grand, 15 grand. Dude, you don't pay your taxes for 6-7 months while you're trying to create the money with new real estate deals. You're like going backwards. It's the worst feeling in the world. All right, moving on. All right. Last one, number 4. Subject to. Now, before I get into this, because I'm about to create and do brain surgery on you guys, I want to make sure that going into this is an advanced strategy, and I'm not going that deep into it right now. I just want to explain the concept so that way you can see there is many different tools for your investing tool belt. This is why I love creative real estate investing, because there's not just one way to do things. With that said, subject to basically stands for going in and taking over control of somebody's real estate, subject to leaving the existing loan in place. So as I'm marketing my business, I'm generating all these leads. Every lead has its own story. Every lead takes on a life of its own. Some of them are perfect for wholesales. Some of them are perfect for rehabs. Some of them I would like to put in my rental portfolio. Sometimes I don't know I even want to put them in my rental portfolio until I get a little further down the line and I'm talking with the seller and I'm like, this property you own free and clear. Would you consider doing a seller finance arrangement with me? Sure. Next thing you know, I'm doing a seller carryback and I'm going to put that into my rental portfolio. Sometimes I'm talking to them, they don't own it free and clear. They have a loan on the property, but the property's in a low enough price point. The underlying debt is low enough and the rental rates are high enough. And I start thinking to myself, I wonder if I could do a subject to on this deal, get control of this piece of real estate, put it into my rental portfolio, create cash flow, and a big payday in the future. So if they don't have a mortgage, I start thinking seller carryback. If they do have a mortgage, I start thinking subject to. All right? And I'm about to go a little geeky on you. I don't mean to like fry your brain, but at least you'll understand the concept by the time I'm done. So a subject to, once again, stands for taking over control of a piece of real estate subject to leaving the existing loan in place. Now, here's the cool thing about real estate in America. Here in the United States, real estate and the money used to buy real estate are created by two different documents. Hope I'm explaining this right. Some states, it's a mortgage state, and some states it's a deed of trust state. This portion explains who owns, right? Otherwise known as the title, right? Who owns the real estate? Who has the right to the real estate? Who gets to control the real estate, rent the real estate, use the real estate, destroy the real estate, build the real estate, right? In a mortgage or in some states, like Arizona is a deed of trust state, this explains who owns the real estate, who gets to use the real estate. This piece over here is the money portion. Okay? Who owes who and how much? So the note is between the bank and the buyer of the real estate, right? And that's who the note is between. And the mortgage or deed of trust is between, or it's just the buyer. And then what happens is the bank secures their loan by the real estate, which is over here, the mortgage. But it's two separate documents. And when you pay off a piece of real estate, this piece goes away and this piece stays in place. So imagine this. Imagine I show up at a seller's house. The seller does not have a lot of equity. They have to sell for some reason. They either have to move, relocate, maybe they're in the military, they're being relocated, they're getting a job relocation. Something's happening where they don't have enough equity to sell through a real estate agent and cover closing costs, cover commissions. Maybe they just bought it a year ago and they put 3% down and they don't have any equity. But they have to sell. One of two things can happen. They can either just move out of the real estate, turn it into a rental, and they can become an accidental landlord. Now they have let's take the military example. They get shipped overseas for 2 years. They got this house that's by the military base. They've only lived in it for a year and a half. There's no equity in it. Now they're overseas trying to manage a property that they make no money on. It's more of a pain in their ass than anything. Here you come and you basically say, hey, what if I can solve your housing problem? What if we left your mortgage in place? I take over control of the piece of real estate. I make payments on your behalf. I'm not assuming your loan, but I'm going to make payments on your loan. And you get to move. You don't have to worry about the house, repairs, tenants, toilets, collecting money, chasing after people, nothing. I'll take over responsibility for all of that. But you have to leave your existing loan in place because you've already pre-qualified for that loan. You already have a loan. And it is good loan. It is good loan terms. and it's good loan. You want to have good loan, all right? You want good loan because if it's a a loan that like is an adjustable rate mortgage loan or something like that, you don't want that loan because all of a sudden the mortgage payments can go through the roof and you can't control that. So you want good loan terms. What does that mean? Means it's a conventional mortgage. It's amortized over 30 years. It's a solid interest rate, right? You know what you're stepping into. Maybe it's a VA loan. Maybe it's an FHA loan, something like that. And so what happens is you step in and you start making payments to their lender over here on their behalf. Now, the bank doesn't know that the homeowner is no longer living in the property. And the way we do this is a creative method. We actually put this in a trust. Then we assign beneficial rights to original buyer. That means the original homeowner becomes the beneficial interest goes to the original homeowner. We call the trust the 555 Main Street Trust. So we are hiding the house within a trust because that's what trusts are for, to create anonymity. We call it the address of the house. We call the name of the trust the address of the house. We assign beneficial interest to the trust. So the only asset in the trust is the house. We assign the beneficial rights to the original buyer, and then we reassign it on to you. But we never file that paperwork. There's about 5 other documents that are needed to be filled out because the whole reason we're jumping through all these hoops is to be able to leave this loan in place, make payments to the bank, and not have the bank find out. And if they happen to find out, we don't want them to exercise the due on sale clause and call the note due. So there's some hoops we have to jump through, but I can't tell you how many times I've shown up to a homeowner's house. I've looked at their loan. It's a good loan. It has good terms to the loan. It's in a low-priced house, clean little house, doesn't need a lot of work, strong rental rates in the area. There's instant cash flow, maybe $400, $500, $600, $700 a month in positive cash flow on the property. I have a homeowner that wants to sell, but they don't know how to get out of their situation. I step in, I give them $1,000 to move. Sometimes I don't give them anything. I take over their property subject to, I do all this creative paperwork to hide the deal, okay? And then I take over control of the house. The homeowner moves on. I use a servicing company to make payments. The homeowner gets notification that the payments are made. And as long as I'm making payments, see where investors get screwed on subject twos is they don't make the payments to the bank, but they collect rents from the tenants that are in the house. And when they get caught, they go to jail or they get in big trouble. So don't do that, right? You better know what you're doing if you're going to do a subject to transaction. That's where good mentoring comes into play. Having a good real estate attorney comes into play. But essentially, the deal is going to look like this. On the acquisition, we use a subject to strategy to get control of the house. Then what we do on the disposition side of the transaction, we do what's called a lease option, right? So you're acquiring subject to, so you don't have to get new financing, right? Then what you do is you offer it for rent using the lease option strategy. You put out bandit signs, buy like rent. You find somebody that in a lease option, the way a lease option works is there's really 2 sides of the transaction. There's a lease, which is your standard rental, and then a rental agreement, and then there's the option to purchase agreement, which means I'm going to pay you some amount of money to have the rights to buy this piece of real estate at some point in the future. The lease plus the option equals lease option. And what ends up happening is you find somebody that's willing to put 5K to 10K down as an option deposit to have the rights to buy this piece of real estate within some certain period of time. So let's say over here, we owe $800 PITI to the bank, right? And over here, we market the property for $1,200 rent plus a 7K option deposit. Buy like rent. There's a lot of people that want to rent to own. Maybe they went through a foreclosure. They can't go to a normal bank to get a house. Maybe they just have $20,000, $30,000 in savings, but it's not enough to buy a house and they have horrible credit. They see your sign, they call you up. It's like, hey, you can rent this house for $1,200 a month, have a $7,000 option to buy it. Let's say what is owed on this house is $100K to the bank. I'll sell it to you for $125K, and we're going to do a 12-month option. All right? So they put up their $7,000 down. They have 12 months to buy the house at $125,000. If they do, you get this $25K because you only owe $100. Actually, you'll owe a little less because every time you make a payment on a conventional loan, what goes down? The amount you owe goes down. So maybe you and maybe within 1 year, this is $98,000. Right? So you just created 2 more K in equity right there. You got your $25K right there. You've already been paid $7,000 as the option deposit. If you feel good, you can even give them a rent credit of $100 for paying on time and in full every single month. So there'd be another $1,200 here that you give them credit for, and you're pocketing everything else, and everybody wins. They get a family gets an awesome house. This guy gets out of his house. You created this creative spread in between. What happens if they don't exercise the option? You can show up and say, hey, no big deal. Listen, I'll allow you to extend your option for $3K for another 12 months. And they say, okay, we're almost there. We just got to fix our credit a little bit more. They give you $3,000 as an extension fee. They might say, look, Cody, I can't buy it. There's no way. My credit's too screwed. I lost my job about 3 months ago. I just got a new one. I'm just not going to be able to buy this house. I say, great, no problem. Move out, start the whole process all over again. Holy guacamole. I just showed you 4 powerful ways to get into real estate with little to no money out of your pocket using 4 creative investing strategies. And this is just the tip of the iceberg. This is just a small part of this amazing world of creative real estate that you can play a part of that I didn't even know existed 14 years ago. And now that I've mastered all these different, we got sandwich lease options, we got options. There's so many different strategies that you could deploy. But now you know it's not a lack of resources, like Tony Robbins says, that's holding you back. It's a lack of resourcefulness. And that's why I love creative real estate investing. And that's why I wanted to shoot this video. Because yes, it is possible to invest in real estate with little to no money down. It's a little bit more difficult to do it with no money, but we can get dang close. All right. If you got something from this video, smash that like button for me right now. Leave a comment down below letting me know your thoughts on this video. If I left anything out, please share it with the rest of us so we can all learn, earn, and grow together. And obviously, subscribe to my channel and make sure you share this with your friends, your family, and your mama. Right? Meow. I don't have anything left to say. That's all I got for you. I'm Cody Sperber, the Clever Investor, signing off for now. Till next time, take care, comb your hair, Sperber out. Hey, listen, while you're here, right after you subscribe to my channel, go ahead and grab my free book, How to Flip Houses with Little to No Money Down, by clicking the link down below in the description. It's my gift to you, and it's a step-by-step guide on how I got started in real estate and how you can too. Hope it helps.